Hi guys, welcome back to another video. My name is Josh, and in this video I'll be providing you with a Sharesies Public Portfolio update. So if you're new here or you don't already know, I run a public portfolio on Sharesies. That was kind of the second episode on this channel where I talked about how to invest $1,000, and I sort of did a public portfolio update every end of month. So the last time that I had a public portfolio update was at the end of March. Okay, so at the end of March was when there was a lot of chaos happening in the market because of the global illness. And at that time, the stock market had crashed. My portfolio was down 17 odd %. And things didn't really look too good. So fast forward 6-7 months to end of October. Now we have the next portfolio update. So I'm very excited to show you guys what has been happening in the portfolio and some of the changes that I've made towards this portfolio. And as always, this video is for entertainment purposes only and is not financial advice. Opinions in this video are general in nature and are not a recommendation, opinion, or guidance to any viewer in relation to acquiring or disposing of a financial product. Viewers should not rely on these opinions and should always seek specific independent financial advice appropriate to their own individual circumstances. And before we go into the portfolio, I just want to let you guys know that there will be a giveaway sometime in this video, so be sure to watch the video to find out. So here is the Sharesies Public Portfolio. The current portfolio value is $7,927.91. And it says here, you're an aggressive investor. So I don't think I'm aggressive, but Sharesies is calling me an aggressive investor. Okay, and total returns here is $1,027.11, representing a percentage return of 14.72%. So the last portfolio update, I was on a negative 17%. And that was during the midst of the market chaos and the market crash. And since then, we've basically recovered a lot of the returns. And you can see here as well, this was a big dip really, right? The global illness, the Rona, whatever you want to call it, but I can't say its name here on YouTube. Yeah, that was a big crash here, and portfolio was down over $1,000 at the time. So to give you a little bit of context, every week I do contribute $70 towards this portfolio, as well as that for every subscriber that I get on this channel, I will top up $1, and I do that at every 100 sort of thing. The thing is, the last time I deposited based on the subscriber count was back in April when I had around 1,500 subs. So there will be another 1,200 based on the most recent sub count that I have. I'm currently on 2.7K. So that's a 1.2K increase in sub counts, and that will be shown in next month's portfolio update. If you want to sign up for Sharesies, you will get $5 using the referral link down below. As well as that, I will get $5, and that $5 will be contributed towards this portfolio. And that's sort of why you can see this dotted line increasing in a straight line, and that's because I've just been consistently adding in the $70 over time. So that's currently where the portfolio is at. And now I'm sure you guys are excited to see the companies within this portfolio. So firstly, we have Argosy Property at $561, a return of 37%. Argosy is essentially a real estate investment trust. They invest in and manage properties including industrial, office and retail properties throughout New Zealand, and they're also a consistent dividend payer with a gross dividend yield of roughly 5%. So this position I had back in March, and I've added a little bit to it, so it has had a good gain since recovery. The next one was Auckland International Airport. So that was one of the newer additions to this portfolio, and I heavily topped up in March and the market was really low. Heartland Group Holdings, 5.5% up, $818. So the reason why Heartland Bank hasn't recovered as much as the other companies is because Heartland Group Holdings is a bank and is more susceptible to the general economic cycle. Currently, we are in a very deep recession, so Heartland Group Holdings hasn't recovered as much. And it's also one of those stocks that I mentioned in my top 3 stocks over here. Check that link out. Moving down, new addition, Infratil. at $507, representing a 2.76% return. So this stock is one that I recently bought in October, and the position that I sold down to buy this was actually Z Energy. So as you might have remembered, the previous portfolio in March had Z Energy, and Z was the worst performing stock in the portfolio. It was down roughly 33% when I sold it, and the reason why I sold it is because the fundamentals of the business has changed. People are working from home more often. A large chunk of their revenue did come from jet fuel, which is basically the airplanes coming in and out. And I don't think traveling will recover anytime soon. And even if it does, it probably won't be as high as the levels that we've seen pre-illness. As well as that, they stopped paying a dividend, and I wasn't sure when the dividend was going to come back. So I sold that position and I dumped it into Infratil. Infratil runs several businesses across the world, but mainly they focus on infrastructure type companies. So you think of utilities, they own Trustpower and Tilt Renewables. They also own stakes in companies, as you can see here, such as Wellington Airport, Vodafone, and CDC data centers operating in Australia. I'm not expecting Infratil to be the stock that will 2x itself in the next year or so, but I'm expecting moderate returns and a company that can pay consistent dividends. So that's why I sold down Z and bought Infratil. The next stock that we have here is Mainfreight at 357 NZD. And the gain on this one is 42.08%. So I believe this is the highest gain currently on the portfolio. And in case you didn't know already, Mainfreight is a freight company. They operate a range of warehousing, domestic distribution, as well as international air and ocean freight services. They reported a very good result recently, and that sent the share price up. NZX, basically the company that operates the exchange. Currently, it's a $615 position, and the position is up 38.73%. And here we have the newest position, Oceania Healthcare, currently $894.68, and total returns are negative 3.36%. So I recently added this stock into the portfolio a few days ago, sometime this week, which is why there is a negative 3.36% return. Oceania Healthcare operates in the New Zealand residential aged care and retirement village sectors. The company offers resident villas and apartments within its retirement villages. Oceania Healthcare has a service that is more care-based focused than its competitors out there, such as Somerset Group Holdings. Some of the older viewers might remember Somerset was a really good stock for me and this portfolio as well. I did recently sell the Somerset position at a gain of about 64%, something crazy like that. And the reason why I sold it to buy Oceania Healthcare is because as well, Oceania Healthcare is paying a higher dividend. And I think Oceania is in a position where they can continue to increase that dividend at a quicker rate than Somerset. So remember, this portfolio is a dividend portfolio. I am having this portfolio to make money on dividends, and I think Oceania Healthcare has a better business opportunity to increase their dividends quicker than Somerset will. So it made sense for me to sell down Somerset and go into Oceania. Currently, there is a 3.36% loss, and I'm not worried about that, and I'm happy to be adding into my Oceania Healthcare position. I do want to make it clear as well, Oceania Healthcare is the largest NZX position that I have in my private portfolio. So if you want me to make a video on Oceania Healthcare and detail my investment thesis around Oceania Healthcare, be sure to hit like on this video. And I think if we can get 100 likes on this video, then I will make an in-depth video on Oceania Healthcare. So that is the newest position in the portfolio. Next up, we have SmartShares ASX 200. So this is a new ETF that was introduced in July 2020. And since then, I have just been adding into this ASX position. Currently, we have $430 in there, representing a negative 1.4% return. Next up, we have SmartShares Australian Midcap Fund, which is close to $1,000 and a positive 17.67% return. So more recently, I have stopped adding into the mid-cap fund and added more into the ASX 200 fund. And the reason for that is ASX 200 has a lower fee than the mid-cap fund, and they both provide exposure to the Australian market. And that's why I have two funds, but over time I might sell this fund to put it all into this one. I'm not too sure yet. So I've just kind of left it there for now. That's why we have two Australian funds. So this is the last of it, Smart Shares Emerging Markets Fund, $984 and a gain of 5.77%. So the Smart Shares Emerging Markets Fund invests in companies based in emerging markets such as China, Brazil, Taiwan, and South Africa. The reason why I have this fund in this portfolio is to add a bit of diversification outside of New Zealand. And next up we have Smart Shares NZ Top 50 Fund, $177 plus 7.8%. So the reason why I left this position as quite a small position is because I already had exposure to individual New Zealand stocks, as well as that this was sort of a position for me to track my performance against the broader market. At the time, we didn't have the NZG fund, which is a more accurate picture of the NZX 50. We had this NZ Top 10 fund, which had a cap of 5% on each position within the ETF. So this was the closest indicator to the NZ50 that we had at the time. So currently it has a positive 8.1% return, whereas the portfolio has a return of 14.72%. So this portfolio has comfortably outperformed the NZ50 fund that we have with the 5% cap. And the last position that I have here in this public portfolio is Smart Shares US 500 Fund. This fund is a $957 position, and it had a gain of 5.68%. So this is all of the stocks within the portfolio. So now let's talk about the giveaway. Whoever can guess the closest to the closing value of this public portfolio next month, I'll give them a $20 Sharesies gift card. So make sure you leave your comment down below, and if you have duplicate comments, then I will disqualify you. And if you haven't already, be sure to sign up with Sharesies using my referral link. You get $5 when you sign up below, and I also get $5, so that would tremendously help this channel. So I did make a spreadsheet, if you remember, from the last portfolio update detailing all the stocks and the movement in the position. So I'll just go over that real quick. So as you can see here, this is the spreadsheet that I have updated for the current values in the portfolio. And basically my ETF positions have dropped since the last time. So this negative 0.9% change is this allocation versus last month's mid-cap allocation of 13%. So that's a negative 0.9% change. So you can see all these ETF positions have dropped slightly, totaling 5.9%. But at the same time, we did add in the ASX 200, which is a plus 5.4%. So ETF-wise, the positions haven't changed. Oceania Healthcare, the largest individual stock position at the moment, and the change is NA because there wasn't an Oceania Healthcare stock. So currently is sitting at 11.3%. Heartland Bank, I have been adding more Heartland Bank relative to the other stocks because I do see value in Heartland Bank. So when I see value, I add. Okay, and you can see that the dividends that they've paid out is actually the highest one out of this portfolio, $22.37. Auckland International Airport, 7.8%. Yeah, hasn't really changed much. And the rest of the stocks in this portfolio haven't really changed much, other than the two new additions as well, ASX 200 and Infratil, both sitting at about a cumulative 11.8% of this portfolio. As you can see here as well, portfolio at market is $7,928, and that represents an increase of $4,429 since the last portfolio update at the end of March. So at the end of March, portfolio was $3,500 and a loss of 17.27%. And now it's a gain of 14.72%. And yeah, big change basically in the portfolio. And returns as well up, and expected dividends up. The gross dividend yield across this portfolio is 2.92%, so that is good because it is much higher than what you can get at the bank currently with a term deposit or savings account. It also has decent capital return, but I'm not too concerned about capital return because at the end of the day, I am investing for dividends. If the portfolio drops again like it did in March, then I'll be happily buying more stock and accumulating stocks that can pay me a good dividend. So that is currently where the portfolio is sitting at. If you enjoyed this video, be sure to hit like and subscribe. Be sure to leave a comment down below on your guess of next month's portfolio value. And yeah, if you want to hear more about Oceania Healthcare as well, make sure this video gets 100 likes. And as always, this is not financial advice, purely for entertainment purposes only. Hope you enjoyed this video. Until next time, take care.